Okay, we are looking at exercise 4-18 on page 236. The object here is to go over the closing entries. There are 4 closing entries, 4 journal entries that you need to make when you're closing out the books and preparing for the next financial accounting period. As you can see, I've set up a T account for income summary. I do that when I'm doing closing entries just so I can see what's going on in the income summary account. So the first thing we're going to do here for Silver Sign Company is the first closing entry, which is we're going to reverse out service revenue. So in order to do that, in order to zero out that account, we're going to debit it. So service revenue will get debited 16.8. Oops, there we go. And income summary will be the account that we credit. Remember, income summary is our holding account. It is the one that we use. It's just a placeholder. It's sort of like a designated hitter. It only shows up at when we're doing the closings. And what it does is it just keeps either the net profit or net loss there until it gets booked to capital. And you'll see that in just a second. So now the next thing I'm going to do is I am going to zero out all of my expenses. So what I'm going to do here is I'm going to debit income summary because I know that that's a debit because I'm going to credit all those expense accounts in order to get them to zero. And what I will do is I'm going to let Excel add those all up for me once I type them in. So I've got salary expense. I'm going to credit for $3,600. I'm going to credit rent expense for $1,400. These are our temporary accounts, our income statement accounts that we're closing out. Those get reset every year. Depreciation expense, credit of $400. Supplies expense, a credit of $200. And lastly, utilities expense, a credit of $600. And then what I'm going to do is I'm going to come over here and I'm going to let Excel add those numbers up for me. Okay, and now I'm going to go ahead and just put that right into my debit, right? So that's going to help me later on, like right now, in figuring out what I need to book to the capital account. So as of right now, I have a credit balance in my income summary account of $10,600. And because we have revenues that are greater than expenses, that $10,600 indicates net income to capital. So now I'm going to close out that income summary account by debiting it for $10,600. And now I'm going to credit my capital account for $10,600. Okay, and let's go right over here and I will zero that out. So As of right now, I've got nothing. That's its new balance, 0, right? Completely closed out. Income summary should never have a balance. It doesn't show up on a financial statement. It doesn't show up on your worksheet. It doesn't show up anywhere. It just shows up to do this one task, and then it goes away. Okay, so my very last closing entry is we are now going to close the draw into capital. So the effect the draw has on capital is that it decreases it. So I am going to debit my capital account. I suppose I should have said silver, comma, capital, but I didn't. So I hope you will all forgive me. But I will do that here. Silver drawing. We're going to make that go away. Now, so we've done all the things in requirement 1. We have prepared the 4 closing entries. The 4 closing entries are: zero out revenue to income summary, zero out expenses to income summary, zero out income summary into capital, and close drawings into capital. Those are your 4 closing entries. And now I just want to show you what capital is going to look like going into the next period. Just bear with me while I set up another T account. Okay, so this will be capital, silver, capital. And he started with a balance of 32.6, right? And he had 10.6 there, right, that he earned. That was his net income. And then he also took a withdrawal, of $800. So at the end of that fiscal period, what we have there is we have a beginning balance of 32.6 plus 10.6 minus $800, which means that he ends up with capital of 42.4 at the end of that period. Now, the second question, the second requirement in this exercise says, how much net income or net loss did Silver earn for January, and how can you tell? Well, he earned net income, and we know that because his revenues were greater than his expenses.